So today the market did something I want you to really sit with. PPI, wholesale inflation, came in at 1.4% month over month. Economists were looking for zero point 0.5. That's almost three times what was expected, and the biggest single month jump in wholesale prices since March 2022. And that too, yesterday, hot CPI. And you have two straight days of inflation data worse than anyone forecasted. And what did the market do? SPY closed up 0.56%, triple Qs up over 1%, chips up 2%. So the question is, why didn't this tape crash? Because the answer matters more than just the headline. Quick thing, if you're new here, every day after the close, I break down what moved and why. First half of the video is the market story, what happened, what it means. And the second half is where I share key levels on the most followed names so you can follow along. Take a swing trade if you like and see the setup play out. Options focused. If that's useful, subscribe. Let's start with the data because this is the kind of print you don't see often. April's PPI, 1.4% on the month, 6% year over year. The annual number is the biggest jump since 2022. Energy goods up almost 16% month over month, driven entirely by gasoline. Services up 1.2%. That last one matters. When services are running that hot, it means the inflation isn't just energy anymore. It's bleeding into transportation, warehousing, healthcare, machinery, wholesaling. The Iran blockade is now a supply chain wide issue, inflation story, not just an oil story. This is the kind of print that 6 months ago would have spent SPY down 2%, and yet today it didn't. So here's what actually happened. 2 consecutive days of bad inflation data, and the market just sat there, said, we already knew this, and rallied. Why? Well, three things. First, yesterday's intraday reversal told you everything. Tuesday morning, the panic was real. Triple Q was down almost 2% at the open, and by the close, dip buyers had reclaimed half of it. That's when committed money showed up. Second, the bond market today didn't really break. Yields ticked higher, but no real spike. That tells you institutional capital is buying the dip in equities, not running to bonds. And third, and this is the one that matters most, money rotated into mega cap AI today. Google up almost 4%, Nvidia up 2.3, Meta up 2.3, Apple up 1.4. These names led on a day inflation should have hurt them. What does that tell you? It tells you that the market is now pricing in something stronger than inflation, and that something is AI capex continuation. The capital allocators have decided that even if inflation runs hot, the AI infrastructure spend keeps flowing. Cisco reports tonight at 4:05 p.m. Applied Materials reports tomorrow. Nvidia next Tuesday. 3 back-to-back chip and AI prints that either confirm the thesis or break it. Now, slow down with me. This is the lesson worth taking forward. When the market gets bad news and rallies anyway, that's not the market being wrong. That's the market telling you that the bad news is already priced in, and it's now looking at the next thing. Yesterday and today, the market just told you inflation is bad. We know. We have moved on. Show us the AI earnings. That's the new game. So if you're sitting on the sidelines waiting for the inflation crash, you might be waiting a long time. The people who matter just voted with their dollars and said that the AI cycle is bigger than the inflation problems. That doesn't mean they're right. It just means they have made their call. Your job is to recognize the call and decide if you agree with them or not. Anyways, going back to what I was saying earlier. So today's tape gave us a clear answer. The dip buyers are still in, and they're betting on AI capex. But knowing that's only half the trade. The other half is knowing which names led, where they closed, and which level matter going into tomorrow. So let's get into that. Let's start with Intel. Intel is a name we have been tracking for a while, and the level we kept talking about was $114. That was the breakout level. And when Intel finally cleared 114, look at the strength of this candle here. That was not a weak breakout. That was buyers stepping in with real momentum. Now, the important thing is this: $114 previous resistance is now acting as support. So, as long as Intel stays above $114, the structure remains bullish and we can continue looking for upside. Now, if you're taking this as a swing trade, this is exactly where the setup was. The break of $114 was the entry area for calls. And with options, I personally don't like buying contracts that expire too quickly. Usually I want at least 2 weeks of time. And if you want to play it safer, 2 to 3 weeks gives the trade more room to work, especially on a swing position. But the key is risk. Remember, risk is really important. You have to manage your risk. You only risk money you can afford to lose, because with options, if the trade fails, you have to be willing to cut it. For me, the invalidation would have been simple. If the breakout would have failed and Intel lost the low of $109 here, that would tell me that the breakout did not hold and I would get out. But that never happened. There was no reason to get out. The breakout held, the buyers stayed in control, and this turned into a very strong trade. And just to put this into perspective, if someone would have risked around, let's say, $1,000 on this setup, this move had the potential to return over $3,000, maybe closer to $3,400, depending on the contracts. That is a phenomenal move in just few days. Now, moving along to Nvidia. Nvidia was another amazing setup. We have been talking about the importance of $197 support on this channel for a long time. And look how many times Nvidia traded around that area and held it beautifully. That told us buyers were defending that level. And once the momentum finally started coming in, Nvidia became a name we had to keep on close watch. The next important area was $207. And once Nvidia held above 207, that gave us the next swing setup. If you were taking that trade, the idea was simple. Stay long while Nvidia holds 207, and if it loses that level, the setup starts to weaken. And look what happened. It ripped. Again, depending on the contracts, a $1,000 risk here had the potential to turn it into roughly $3,000 on this move. And that kind of trade we talk about on this channel, not chasing random candles, but waiting for the key levels, watching how price reacts, and then letting the setup play out. Moving along to AMD. AMD was another monster swing trade. Ever since the earnings gap up here, we were focused on the importance of $400 area. That was the critical level. And when AMD held above $400, that told us that earning move was still alive. The next target became the break of the post-earnings high around $430. And once AMD broke through $430, that became the next trigger. If you went long through that breakout and held that move, this was another setup that could have produced a very strong return. Again, potentially around $3,000 or more, depending on the options. And even now, the setup is still fairly bullish as long as AMD is trading above $430. For me, that's the key level. If AMD closes below $430, then the trade starts to lose momentum. But above that level, buyers are still in control. Now, let's talk about Tesla. Tesla has been an absolute monster. We were tracking this name ever since it started trying to break through this descending trend line. Once it broke out of it, the next level that mattered was $385. That became the base. Tesla needed to hold $385 to build enough strength for the next major breakout through $400 level. It tried to break $400 multiple times before, but eventually it cleared that level on a strong gap up day. And ever since then, Tesla has just continued going higher and higher and higher. The level we talked about yesterday was $425. Tesla needed to hold that area to keep the move alive. And the second level was $436. We said if Tesla could stay above 436, that would show the bullish momentum is still there. And that's exactly what happened. Tesla stayed above $436, and that tells us buyers are still pressing the name higher. So now, as long as that momentum stays alive, the upside target remains around 460 to 465. This has been an absolute monster trade. And if you caught this swing from the lower levels, even with a $1,000 risk, this had the potential to produce a massive, massive return, possibly several times the original risk. But again, the lesson here is not just the profit. The lesson is the process. Find the key level, wait for the breakout, know where the trade fails, give the contract enough time, and don't risk money you cannot afford to lose. That's how you trade better and smarter. So going into tomorrow, those are the names I'm watching very closely. I hope you found this video to be useful. If you did, please consider subscribing, and I'll see you in the next one. Take care.